Reverse mortgages may still raise eyebrows in the church, but do they deserve to? Hi, I'm Rob West. Reverse mortgages continue to carry a negative reputation, but faithful stewardship means evaluating financial tools based on how they work today. Harlan Accola joins us to explain why many Christians remain hesitant and how a modern FHA-insured reverse mortgage could fit into a thoughtful retirement plan. And then we'll take your phone calls at 800-525-7000. That's 800-525-7000. This is Faith and Finance Live. Biblical wisdom for your financial decisions. Well, our guest today is Harlan Accola. He leads the reverse mortgage team at Movement Mortgage, one of our valued underwriters. Movement Mortgage helps families explore home financing solutions, including reverse mortgages designed to help eligible homeowners use their home equity thoughtfully in retirement. Harlan's here today to help us separate fact from fear and better understand these tools. By the way, he will stick around today and we will prioritize your questions on topic. So perhaps you've been one of those that had misunderstandings about reverse mortgages. Maybe you had concerns. Maybe you're just wondering, is this the right tool for me? Now is the time to call. Today is when we can get those questions answered when you call 800-525-7000. Every call on the topic of reverse mortgages today, we will send you as our gift Harlan's book on home equity and reverse mortgages, just to further educate you on these products. Again, the number 800-525-7000. We'll dive in here in just a moment. Harlan, great to have you back with us.
So good to be here, Rob. Thanks for the opportunity to help.
You know, many believers who want to steward their finances wisely are hesitant when they hear this term, reverse mortgage. Maybe they have been told these loans are expensive, risky, or just unwise. So let's dive into that. Why do you think these products carry such a negative perception?
Well, Rob, debt of any kind feels kind of unspiritual, like bondage. The borrower is the servant to the lender. In your book, Our Ultimate Treasure, one of the titles or one of the chapters is debt mortgages the future, or debt creates problems for the future. And that's where a lot of people who don't realize that a reverse mortgage is guaranteed never to have a payment and never to be something that it leaves a debt behind for the children, they feel, well, sooner or later, there's going to be another shoe to drop and we're going to get kicked out of our house. We're going to leave a debt behind for our kids. It's just not going to end well. One person said that to me. This sounds great, but I don't think it ends well. And that's where we have to kind of show people what happens in the end as compared to a credit card problem or some other high interest debt that requires big payments. And that's really just a misunderstanding of what's there at the end. And then there have been abuses of the product in our industry and in the HEI industry. So as in any product, things can be misused.
Yeah, let's talk about that for a second, because you mentioned something quickly there in HEI. What is that, and why is it very different from what we're talking about here?
Yes, HEIs and HEAs are home equity investments, home equity agreements. And there's a number of companies that do this. There's actually billions of dollars of investments that have went into these over the years, and they are not a situation where they're alone. You are giving up a certain portion of your house, if not all of it. And it usually has a short-term period of like 10 years. And so it's very easy for people to lose their home, lose all of their equity, and they are not regulated by the Federal Housing Administration or any mortgage regulator. They are really kind of the Wild West, and so they can kind of charge whatever they want, and often the costs are 30-40% per year, and people don't realize it because they think that they're only giving up a small portion of their equity.
Yeah, that's really helpful. So then what makes today's home equity conversion mortgage, what we know as a reverse mortgage, different from what many people remember from years ago?
Well, the biggest single issue is that the borrower is not the servant to the lender. There's never a required payment. You can never get kicked out. You never outlive too long, or that your house goes down in value. And it's federally insured. We can actually use the word guarantee, which you can't on a lot of products, because it is federally insured by the FHA. And there's been a lot of laws and rules that have changed to protect the borrower in the servicing scenario. So it makes a dramatic difference in education that it is something that's safe.
Separating fact from fear on reverse mortgages today. You know our position. We love the idea of you getting out of debt and staying there, but in this fourth quarter of life, whether it's thinking about the timing of assets or if you're ill-prepared, this can be an effective financial planning tool. And to Harlan's point, it is non-recourse debt. Your questions after this with Harlan Accola. Stick around.
The opinions offered during this program represent the personal or professional opinions of the participants, given for informational purposes only. Any information provided is not intended to replace advice from a financial, medical, legal, or other professional who understands your specific situation.
We're talking reverse mortgages today. This is Faith and Finance Live. I'm Rob West. Harlan Accola is here. He leads the team at Movement Mortgage, the reverse team, that is. If you'd like to learn more, go to movement.com/faith, or better yet, faithfi.com/movement. That's faithfi.com/movement. Harlan's going to stick around today. We're taking your questions on reverse mortgages, and every caller on topic gets a copy of his book as our gift to you. Let's dive in. We'll begin in Texas today. Rowena, thanks for calling. How can we help?
Hi.
Hi.
Yes. Did you want me, my question?
Yes, ma'am. Thank you for calling. How can we help you?
Yes. I want to know, is it usual for reverse mortgage companies to charge you interest?
Yes. Harlan, let's talk about the interest on these and then any other fees.
What it comes down to, Rowena, is we are in the business of lending money and collecting interest, just like we do with forward mortgages, traditional mortgages. You take out a 30-year mortgage and you pay it back with interest. A reverse mortgage, also, we lend you money on whatever you use, and then we charge interest on that, which is usually somewhere in the neighborhood of about 2% over the 10-year Treasury, which is about between 6 and 7% in today's 10-year Treasury market, which is higher than normal, obviously, but that's went up quite a bit from 5 years ago. So that is only charged on the amount that you use. The difference is you don't pay until the end or whenever you want to. So it doesn't have to be paid until it's paid out of the equity, and you're not responsible for that personally. The value of the house is. There's also cost to set the loan up. The most notable cost is 2% of the value of your house, which is it is not a homeowner's insurance, but is mortgage insurance that guarantees three things. You never will get kicked out of the house, no matter how long you live. The balance will never be higher than the value of the house, and you never have to worry about making a payment unless you want to, and your payments are always optional. So those are the fees that are involved with being able to get a reverse mortgage, and that information is given to you every month so you know exactly how much you're being charged and what the total is on the payoff at any given time. Great question, Rowena.
It sure is. Rowena, thank you for calling today. Let's go to Georgia. Hi, Nathan. How can we help you?
Hey, yes, sir. I had a quick question about the reverse mortgage for my mom. I'm wondering if it would be a good option for her. She's on a fixed income, and she's in her 60s, and I'm just wondering, she did a home equity line of credit, but they really didn't give her a lot, I think, due to credit, and I don't know if that would affect a reverse mortgage as well, or if that'd be something totally different.
Yeah, it's a great question. Let me ask you one follow-up, and we'll get Harlan's thoughts here. Do you know what your mom's home is worth, and then what she owes on any mortgages she has outstanding in total?
I think it was around like a $12,000 or $15,000 loan on that. The home was paid for, and I think it's probably worth in like the low threes.
Okay, very good. Harlan?
Did you say the low 30s, Nathan?
Yeah, the home worth in the low 300,000s.
Oh, 300,000. Okay. Well, first of all, Nathan, thank you. There are so many kids that are adult children that are not concerned about their parents. And it's such a huge issue. Sometimes they don't even get on a call with us. So thank you for calling in. What a lot of people don't realize is when somebody's on a fixed income, about 23% of people in the U.S. right now over the age of 65 are in poverty. And that doesn't many of them are not really in poverty. They own a house that's worth $200,000, $300,000, $400,000, just like your mom, and so they can just use some of that. in answer to your question, would it make sense for your mom to do it? Is that a good idea? Probably, to supplement our income. I'd need to know more about it, and we go through all that process with you and your mom. But typically, she's going to be able to, in her 60s, she's going to be able to get somewhere around 30% of the value of the house, which if it's worth $300,000, she's going to get $100,000. We'd pay off the existing line of credit. The reason that she and the credit itself is not a big issue for us as long as she's on time with her taxes. And then even if she does have a very low credit score or no credit score, we still have programs that will be able to help her without charging her more in interest. So I need to know a little bit more about that because that is a very small amount, but we'd probably be able to give her somewhere around $100,000 in a line of credit, which would enable her to pull out maybe even $300-400 extra every month for the rest of her life, or $1,000 extra for the next 10 years. So it just depends on what you want to accomplish, but it would make a dramatic difference in her cash flow and take a tremendous amount of pressure off from her just worry about money when you're on a fixed income like that.
And obviously, Nathan, she still owns the home, can live there until she either moves out permanently or till the end of her life, and then whatever equity is remaining in the home would be available for her heirs or for her to give to ministry. But could be, as Harlan said, a game changer. If you want to learn more, you can connect with Harlan and the team at faithfi.com/movement. And we'll send you a copy of Harlan's book, Nathan, to pass along to your mom in case she has questions. So just hold the line. Let's go to Minnesota. Hi, Andy. Go ahead. Andy, are you with us?
I am with you. Thanks, Rob. I just
Great.
got to
Sure.
just take you off a speakerphone.
Oh, no problem whatsoever.
So we are looking at selling our existing home now that we're empty nesters, maybe in 2 or 3 years, and downsizing into like a patio home, one-level patio home. And I guess our biggest question, I had never thought about a reverse mortgage for or accessing our equity and maybe financing some of our final costs here as retirees, but wondering what is a percentage of equity that we'd want to have? Is there a minimum? And I mean, obviously it wouldn't be 100% equity that we would have in the forever home. We'd finance a little bit of it or need to, but wondering what Harlan would have for guidelines on how much equity would be for a minimum and as we're thinking and planning on a selling price and a buying price for that next home.
Yeah, really good question. Go ahead, Harlan.
Well, that's such an important question. There's so many people in their fourth quarter of life that should be moving. We did that. We moved from Wisconsin to Minnesota here by you to be closer to our grandkids. And so and we have a one-level home, which is much better than the three-level home that we had where we raised all the kids. So you're making a very wise, thoughtful scenario when you don't have to move, and many people should be doing the same thing. So thank you for bringing this issue up. What happens is you need about 60 to 70% down when you're in your 60s. So you need a significant amount of money that you put down. So if you're buying a $400,000 house, for example, a new little patio home, then you'd put down somewhere around $250 to $270, and then we'd come in with the mortgage for the rest of it, and you would not have to worry then about making a payment on that amount. That would be on the new house, so you'd use some of the equity from your old house to put it into the new house. Very important scenario.
Very good. Andy, we'll see if you have any further questions there during the break, and we're going to take more questions right after this. Stay with us. Well, we're talking reverse mortgages today here on Faith and Finance Live. I'm Rob West. Harlan Accola is here from Movement Mortgage. By the way, we're taking your questions today for Harlan and reverse mortgages, 800-525-7000. If you have a question, perhaps you're wondering if it is a good fit for you, or maybe you've heard things over the years, you wanted to clear up some confusion, today's the day to call 800-525-7000. Every call on that topic will send you as our gift a copy of Harlan's book, Home Equity and Reverse Mortgages. Before we head back to the phones, as we look at this, Harlan, through the lens of stewardship, in what ways could a HECM help someone manage their resources more wisely, especially as they think about the timing and the implication of tapping various assets in a tax-efficient manner?
Well, the thing is that we should treat our home, in my opinion, just like we would treat any other asset that we have. And when we can get money from our house tax-free, when we can use a standby line of credit, when we can increase our cash flow so perhaps we can give more now rather than passing assets at death. I'm a big fan of Luke 16, that one is faithful in little is faithful in much. Whether we're dealing with the equity in our house or an IRA or whatever it is, what is the best and smartest way to use that in the light of God's kingdom? And when you can free up cash flow, you can simply be more generous. And that has made a difference for many of our Christian clients from that perspective, because the equity is unlocked and there's money that can be used now instead of later.
Yeah, that's well said. The phone lines are open. Questions for Harlan Accola today, 800-525-7000. Call right now. Let's go to South Carolina. Hi, Melody. Go ahead.
Hi. I'm glad. Thank you for taking my question.
Sure.
I'm trying to understand, how can a person be sure that when they sign up for this type of reverse mortgage you're speaking about, that they're not signing up for that old type you mentioned earlier? I don't know all the names of the things that you were saying, but is there certain verbiage or something to look for when you're trying to check this out?
Yeah, great question. Harlan?
Well, there is. Federal Housing Administration, FHA, HUD, Housing and Urban Development, should be all over. It's much easier to get an HEI or an HEA, the ones where you're giving up some of the equity. Anytime that you are not getting a counseling session, you should have a required counseling session on the phone or on Zoom. If you're not getting a counseling session, that's usually a sign that it's something that is not federally regulated. And you need to deal with a company you trust and that you believe in, that is going to steer you in the right direction for what's available. And you simply ask a lot of questions and look in the paperwork to make sure that the keywords is non-recourse, that there is never a situation where you have to worry about paying it back, and that there is involvement from the Federal Housing Administration. So that's really the quickest way, and we can explain more in showing you the difference. But if somebody can't give you those guarantees, then they're not representing FHA. You have to be licensed in that scenario as well.
Melody, the technical term of the product we're talking about today is a home equity conversion mortgage. Home equity conversion mortgage, or HECM for short, HECM. You don't want anything different than that. And that's going to be the reverse mortgage we're talking about, where there's non-recourse, meaning, you would never have owed anything more than the home itself. You keep the equity once you pay off the mortgage, when you sell it, or your heirs at your death, and there's never a payment required. And so, again, it's called a home equity conversion mortgage. If you want to check with the team at Movement, just go to faithfi.com/movement, and our team will send you a copy of Harlan's book so you can learn more. Thanks for your call. Let's go to Cleveland. Doug, how can we help you?
Hi, thank you for taking my call. I'm just wanting to find out if there is like an age at which you can actually access these HECM loans.
Yeah. Harlan?
Yes, the official age is 62. And one person, as a couple, one person needs to be over 62. As I mentioned, my wife was only 59, but because we're married, she qualified at the same time. And mathematically, in most cases, if you're not moving soon, it makes sense to do it earlier rather than later, but you can access it at any time. You bring up a great question, because when I was in my 40s, I started planning for my reverse mortgage at 62. We do that with all of our clients that are doing forward mortgages in their 40s and 50s, letting them know that by the time they get to 62, the payment will go to zero without paying their mortgage off to zero. And so that's something that if you're not 62 yet, you're wise for thinking and planning ahead, because it should really be part of your overall retirement plan, because it's not a good idea to have a mortgage payment in retirement. Nothing wrong with having a mortgage, but you don't want a mortgage payment in retirement. And that makes all of the difference in cash flow.
Yeah, very good. Doug, thanks for your call today. We appreciate it. Harlan, we've got just about a minute and a half before the break. I'm curious. I mean, so obviously you're still working. You weren't in that position where, you were in the fourth quarter, retired, living on a fixed income, and yet at 62, you and your wife got a reverse mortgage. What was the driver of that for you?
Well, the main driver was tax savings. We have some investments in IRAs and so on. We wanted to reduce our tax bill as much as possible. We wanted to be more generous with our children and with our giving. And when we could eliminate that payment, that freed up about $3,000 a month for us. And that was a big deal. It changed a lot of things in our cash flow, even though I'm still working, so we could afford to make a mortgage payment, but it made more sense to put money into other investments and take less out. So we're just trading our home equity for more in the other place and for being able to be more generous, not only to our family, but to the kingdom at large. Because it's so easy to just think, well, we got to keep putting money in our house. Well, if you do, it's just buried there and you can't use it until later. And so we just made the decision that we wanted to, from a stewardship standpoint and from a wisdom standpoint, give while we were of right mind and could be of help to others and seeing the needs. We certainly wanted to take care of other folks too.
Yeah, very good. Harlan Accola is here today. When we come back, we'll tackle some more questions. Ventura's got a great one in New Mexico. Ventura has solar panels tied up in the deed of the house, wondering if that'll affect a reverse mortgage. And then what about mobile homes as well? Perhaps your question, 800-525-7000. Harlan Accola is here today. We're separating fact from fear on reverse mortgages. Stay with us. So glad to have you with us today on Faith and Finance Live. I'm Rob West. Faith and Finance is listener supported, which just means if you love the program, we'd love to invite you to support the ministry. We can't do what we do without it. You can consider becoming a partner. A gift of $35 a month or $400 a year will ensure that you get all of our partner benefits, a quarterly issue of our magazine, Faithful Steward, our quarterly ministry newsletter, on top of all of the new studies and devotionals that we come out with, including our newest devotional due out early next year from Randy Alcorn. We're so excited about that. The first ever devotional from Randy on money is going to be released by FaithFi early next year. We're also working on Field Guide number 2, How to Prepare the Next Steward, as you think about passing character and spiritual and relational capital before financial capital. How do you do that? What does God's Word say about it? What are the exercises to be intentional to pass spiritual capital before financial capital? Well, this field guide will address that, and we'll send it to partners. So to learn more, just head to faithfi.com/give. That's faithfi.com/give. Harlan Accola is here today. We're talking reverse mortgages, separating fact from fear, and trying to address some of the questions that people have had from the years where these products got a bad reputation, in many cases for good reason. But the home equity conversion mortgage of today is an entirely different product. We're shedding a light on that today and talking about how it can be, not for everyone, but it can be an effective financial planning tool to consider in the fourth quarter of life. We're taking your questions today, nearly all the lines full, so let's head right back to the phones. To New Mexico, Ventura, thanks for your call. Go ahead.
The question is, we just paid our home off last month, but in going through the song and dance and back and forth to get solar panels, which I have no regret, it's a wash between utilities and payment, I don't recall whether or not we tied up the deed in the solar panels. What would happen if it was?
Yeah. Harlan, your thoughts?
Very common scenario, Ventura. A lot of the homes we do have solar panels, and most solar companies, I can't speak for yours specifically, but almost all of the solar companies will subordinate their position and take the lien off temporarily because we have to be in first position. So they'll take the lien off, we'll put ours on, and then they'll put their lien back on top of ours. We do that frequently. So we're very familiar with the system. Some of them are not as responsive as others, and it might take extra time. but almost all of them have a lien on your property, and we have to deal with that. But that does not mean that you cannot get a reverse mortgage. It's just a little bit more messing around, and we are really good at getting that taken care of and get it taken care of almost always.
Yeah, very good. Ventura, if you want to follow up with the team there, hang on the line. We'll get your information, get you a copy of the book, and then our team can connect you with Harlan to learn more, or you can go to faithfi.com/movement. But probably not in the deed, probably just a solar-related lien, but to Harlan's point, it does need to be addressed. So thanks for your call today. Let's go to Florida. Hi, Tom. Go ahead.
Hey, my name is Tom, and I was living in a mobile home which got destroyed by a hurricane. So I ended up buying a condom and paid a lot on it, but I still owe $29,000 on it. And at 80 years old, a 30-year mortgage is not too attractive. So I was thinking maybe I can get a home equity conversion loan or a mortgage on it.
Yeah. Harlan?
Great question, Tom. We do a lot of condominiums, especially in Florida. There's a lot of condos in Florida. And yes, at 80 years old, you're long past the time when you have to make a mortgage payment, and it sounds like a pretty small amount that you have as well. But at 80, you're going to qualify for a bit more than 50% of the value because of where your age is. That is something that I would definitely check into, because really what we say is, why don't you make your payment optional? Even if you think you might want to make payments in the future, you always can. But if health changes and inflation and everything else, make your payment optional so you can make it if you want. And if you don't want to, you don't have to. You have a lot more options, and you have a significant amount of equity. So we'd love to visit with you and go over the specific numbers.
We appreciate your call, Tom. Thanks for being on the program today. 800-525-7000. We're staying in Florida. Shirley, go ahead. Hi, Shirley. Are you with us? All right. Let's head to Chicago. Susan, how can we help you?
Yes. My husband and I live in Chicago, and my husband's retired, and we're thinking about moving to Florida to buy a condo. And we don't have a lot of equity in our home currently. Can we buy a house or a condo in Florida with a reverse mortgage?
Yeah, Harlan?
You can. In your 60s, you're somewhere around 60 to 70% down. In your 80s, you're 40 to 50% of a down payment, which doesn't have to come from your current house. And one of the things that I should mention that I did to the previous caller is condos have to be FHA approved. So before you start shopping for a condo, we'll tell you where it makes sense to shop for a condo and the type of condo that you want with the proper, really the proper financials behind the condominium association. Sometimes you just may end up doing a townhome or something. But it would certainly, whenever you're moving, the quick answer is yes, you can buy a house with a reverse mortgage when you're past 62. All the specifics vary depending upon your personal situation, what you're selling in Chicago and your age, et cetera. But we handle that many times a week with somebody selling and moving, especially when they're moving to Florida or a warmer place from the North Country. And so we'd be very willing to go through all of the different scenarios. It usually takes about an hour to discuss all those things, and we'd be glad to set time aside for you.
You said if in our 60s. My husband is 63. I'm 61. So what percentage was that? 60% of the
you'd be. It
value?
changes every every Tuesday, so it's not an exact number. It depends on the interest rates, but it'd be between 60 and 70%. This week it'd probably be about 65% of the new value.
Okay. All right. Thank you.
Absolutely,
Thank you
Susan. Thanks for your call today. We appreciate you being on the program. Let's go to Ohio. Kim, go ahead.
Hi, I was wondering, all of this sounds so good, and it's almost like it's too good to be true. So I'm wondering, what's the downside, if there is any, and when would it not be appropriate to, apply for one of these loans?
Yeah, that's the right question to ask, Kim. Harlan, we've got about a minute until the next break. Go ahead.
Yeah, so the big thing there, I always say it's not too good to be true, it's too good to be free. You're giving up some of your equity in the form of interest. And so you got to give up that equity. You have less at the end. So there's less to pass on, but you have more today, and you have more that is left in your investment side. So it's nothing more than a trade. And when you should not be doing it, because there's some upfront costs that you're paying for insurance to guarantee all of these things, is when you're only going to be in a house for less than 3 years. It really is not justified to go with the cost. It's something that you should be in for at least 3 or 4 years or longer. So we'd be happy to go over your specific situation and show you the positives and the negatives and see whether or not it fits in with your lifestyle and your retirement plans.
Yeah, I think that's exactly right, Kim. You know, there are plenty of folks that say, listen, I want to get out of debt. I want to own my home. I want to be free and clear, and then I'll pass it on. And if that's you, this is not the product for you. But others say, no, I need the money, or I'd rather tap other assets first. And this can make a lot of sense. Thanks for your call. We'll be right back. Harlan Accola is here today. We're talking reverse mortgages on Faith and Finance Live. Every line full, so let's get right back to the phones. We'll get to as many calls as we can. Cleveland, Ohio. Yvonne, thanks for calling. Go ahead.
Thank you. I was wondering if you've been in your home, but it's not paid for. I've been in my home about 30 years. I am single. I own the house. It's worth about $300,000 now. Can you use this reverse mortgage to do home improvements, like a new kitchen, new bathroom?
Yeah, great question. Harlan?
Well, one of our things we always say is you should use your home to pay for your home. It's usually wise because it's going to increase the value of your home if you do a new kitchen, new bathroom, fix some things up. Typically, that's going to be something that increases in value, but you can't use it while you're alive and living in it. So it just makes more sense to use some of the equity to do those improvements. To answer your first question, do you have to have your house paid off? No, I didn't have my house paid off when I did my reverse mortgage. I used the reverse mortgage as a lump sum to pay off my existing mortgage. So in your situation, whatever you have left, if you'd be eligible for, if you've been in your house for about 30 years, depending upon your age, you'd be eligible for somewhere between $100,000 and $150,000. So we would pay off your existing mortgage that's left, eliminating your payment, making it optional, and then giving you money for the improvements of the home. So I would say 70-80% of the loans we do, the people do not have their house paid off. We're paying off an existing mortgage. That's one of the best ways to use a reverse mortgage because it immediately changes your cash flow and makes it easier to save or use less of the money that you have in investments or savings accounts.
Yeah, very good. Yvonne, thanks. Harlan, just curious, what is the most common form of taking the equity once you do a reverse mortgage?
Well, if they're paying off an existing mortgage, for sure the lump sum to pay off the existing mortgage, but there's almost always money left. So by far the most common scenario is a line of credit. We don't encourage people to take out money they don't need or will probably not use immediately because they're just accruing interest on something that's not needed to be pulled out. So the most common is a line of credit because really we're just using the first amount of the line of credit to pay off the existing mortgage. It's not a different mortgage. It's the same thing. We're just using that line of credit for the first draw to pay off that existing mortgage.
Yeah. By the way, if you want to connect with Movement and just learn more about your situation, just go to faithfi.com/movement and you can connect with the team there. Let's go to Illinois. Beverly, how can we help you?
Hi, I have an aunt that I think could benefit from a reverse mortgage, and she and my uncle, knew how to work and save, and they had no children. They were unable to have children, so the nephews and nieces are discussing this issue. The thing is, when my aunt was in her late 80s, she told her nieces and nephews that there would be money for us when she passed on. Nobody cared about that, but she felt like she wanted to say that. She also had both of her knees replaced at that time, and it was the surgery didn't go well, and she had trouble walking. So now she's 100 years old, and she cannot walk on her own. She's a fall risk, so she has a live-in caregiver who makes slightly more than $100,000 a year. So she now has no money. And some of the nieces and nephews, myself included, want to encourage her to take out a reverse mortgage to continue living in her house, hopefully to the last days of her life.
Yes.
And some of the other nieces and nephews have different ideas about selling her house, putting her in a retirement home, and she couldn't function on her own in the retirement home. But anyway, so we have issues, and I was wondering what you would advise.
Yeah, Harlan, I know you get involved in a lot of these family situations. What are your thoughts here?
Yeah, I've heard so many of these scenarios. The number one thing is what your aunt wants, and you're so kind, Beverly, to be concerned first about your aunt, because some heirs are not. And there's no question that almost always the person who's lived in the house for years and years or decades does not want to go to a home. If she's happy going to a home and she looks forward to that and wants to do that, nothing wrong with that, if that's what her goal is. But I've seen many, many people that have been forced to sell their house, and they died shortly after because they didn't like going to the home. So it really depends on what your aunt wants. But typically, it's a situation where the longer we can keep somebody in the house, the better off they are health-wise, emotionally, and it's kind of a toss-up from a financial standpoint. So what would make the most sense with the number of nieces and nephews, I do this often, get everybody in a Zoom call from wherever they live and talk about all of the options and her wishes and what the situation is and what the financial resources are in the home, what we could do. At 100 years old, she's going to get close to 75% of the value of her house. So it'd just be a good thing not to decide to get it, but just to talk about all the options, because I've been through this so many times that even if nobody does a reverse mortgage, I can at least be of help as to how to make the decision and things to do. I'd be honored to help your family, Beverly, and certainly be of help to your aunt who's 100 years old.
Beverly, thank you for your call. If you hold the line, our team will give you Harlan's team's information and make sure you get connected if you'd like to. Harlan, I would imagine you get brought into some of these conversations, even with extended family. Is that right?
Well, sometimes we become psychologists and peacemakers.
Yeah.
So without question, it's a very touchy subject when it comes to money. And we do our best to just make things clear and what the options are. And it's fun to be able to help and to diffuse some of the heat and light that goes on in some of these discussions.
Yeah, I can imagine. Faith is in Indiana. Faith, thanks for your patience. How can we help you today?
Yes, I have a question about our house is basically pretty much paid off, but we have a lot of medical bills in situations that make it hard sometimes to get through the month. And we want to leave an inheritance to our family, to our kids. So would a reverse mortgage be a good thing to do? Because somebody's got to pay it back, I'm sure. I don't quite understand it all.
Yeah, Harlan, give us kind of the rundown here.
Well, sure. It's anything that your estate is responsible for, whether it be medical bills, whether it be credit card bills, a car loan, a house loan, whatever. They're all the same. It's all the same situation. And so what I would encourage you to do is take a look at balancing those costs. Sometimes you can solve medical bills for 50 cents, 25 cents on the dollar if they get money up front, and you can save some money on that. We've done that a number of times where we've talked to the medical providers and they say, hey, we'll settle for this amount of money if we can have it all right now. And we pull that money out of the reverse, and people can sometimes save tens of thousands of dollars.
Thank you for your call, Faith. We appreciate it very much. We're going to continue to take your phone calls. We'll try to get Harlan back on the line as well and see if we can continue down this track. You know, as we think about this idea of a reverse mortgage, you know, one of the key understandings is, again, I think going back to the basics of money management, we want to spend less than we earn. We want to avoid the use of debt. We want to have some margin or some liquidity and make sure that, we understand that we can't live right up to the edge. We want to give generously and set long-term goals. And when we do that, we put ourselves in a position to experience God's best. Now, that may mean you being completely debt-free. It also may mean if you've not saved enough, you need to look at how you can provide for yourself. What sources of income? If Social Security isn't enough, are you sitting on home equity? Do you want to stay in your home? And would your heirs rather you do that and have a little margin than be able to inherit the full amount of the home that they're going to sell anyway? And I think that's where it often can make some sense. Let's try to head back to, looks like Indiana. Faith, are you with us?
If I could, I really would like to get a book. I'm an avid reader, but I'm just kind of balancing medical bills, and we're making it, but I'm sure cutting back in a lot of areas. And then also I just want to leave an inheritance, to your children's children. But that's kind of where I'm at, but I don't really understand. I know the reverse mortgage, okay, we got so much out of the house, then that's got to be paid back somewhere. Is it when you die, they have to pay it back in the estate or what?
Yes, just like a forward mortgage, Faith, at death or when you move out permanently, any mortgage would have to be paid out of the proceeds of the sale of the home, or it has to be refinanced. And the same is true with the reverse mortgage in the same way it would be with a forward mortgage. The only difference is with the reverse mortgage, the payment is optional. So you don't have to make the payment, which means as the value of the home is increasing, the loan is increasing because of interest as well. But whatever equity remains is available for the estate. And just like any mortgage that's on a home at death or when you move out, it has to be paid out of the equity of the home. We will be sure to get that book out to you. Stay on the line and we'll get that to you right away. Let's finish in Tampa with Sammy. And we have just about 45 seconds. Go ahead.
Yeah, hi. I'm calling because I'm 60 years old, and I am planning ahead reverse mortgages on, in my future to do. The home, it's worth about $300,000. There's no mortgage. It is a double-wide mobile home, and I do know those are permissible. But my question is, he mentioned earlier about the earlier the better to do a reverse mortgage. What did he mean by that? Because I know it's based on the age, the value of the home, and the equity.
Let's do this. I'm going to have him hold the line, and we'll answer your call off the air, Sammy. Unfortunately, we're out of time. Stay right there. Harlan, really appreciate you, my friend.
Thank you so much, Rob.
All right. If you want to learn more, go to faithfi.com/movement. Big thanks to my team today. Faith and Finance Live is a partnership between Moody Radio and Faith Fi. See you tomorrow.